This is Scott Whitwam with your morning real estate investor update. And today's top story, Fed won't stop. On Wednesday, Federal Reserve Chairman Jerome Powell announced that the Fed cut the funds rate by another quarter point. In times past, I would have said great, but we're not living in times past. We're here now. This summer, Powell told us how important it was to reach 2% inflation before cutting rates. I agree this was going to be a heavy load to lift with the government spending like drunken sailors. Yet in September and just before the election, the Fed began cutting rates without stabilizing inflation at the 2% target. But the Fed won't stop, having cut rates a full point now with inflation on a constant rise. No wonder mortgage rates are back where they are before the Fed started cutting rates. Maybe it's time for Chairman Powell to resign. In today's mortgage rate update, will down be up? Can anyone guess how the recent Fed rate cut will affect mortgage rates over the next month? Will cutting the base rate cause mortgage rates to rise again? With inflation on the rise, we're just starting to see a recovery in mortgage rates after the last Fed rate cut. At this point, there needs to be some corresponding government spending cuts. Or the bond markets will likely rise again like they did after the last cuts. And down will likely be up again. Bank raters reporting that their national average for the 30-year fixed-rate mortgage has already risen this week to 6.84% compared to last week's 6.73%. The 15-year rate also gave back its recent pullbacks this week, as is reported at 6.14% at the weekend compared to last week's 6.05%. In today's wrap-up, give me a raise. As a real estate investor, my goals all have an increase component built into them. When I do well and manage my finances, I get a raise. As investors, this is what we do. As competitors, we each get better at running our businesses. As friends, we provide coaching and mentorship to each other. Now, to my soapbox. 2024 has been an unprecedentedly worst real estate sales in the last 35 years. In big part because the government has mismanaged spending, regulation, trade, waste, and fraud. This last election was part about stopping those failures. So knowing that Americans want financial accountability, Congress has proposed a 40% pay raise for themselves. This kind of stupidity must stop. When we have surpluses, not deficit, that's when you can propose a raise. They reward failure and not success. I say no to their pay raise. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.